Santo came out with a report which put the target of Biocon at 186 rupees, indicating concerns of future outlook and also indicating concerns on the governance and accounting standards of the company. We're now joined by Ms. Kiran Majumdar-Shaw, the CMD of Biocon, who will tell us whether these are indeed valid or not. Ms. Shaw, thanks very much for speaking with us. First up, the Street seems to believe that post the termination of the Pfizer deal, there are serious issues as far as the future earnings of the company are concerned and the future biosimilar insulin aspirations of the company. Is that a valid concern?
Absolutely not. In fact, there is a rogue analyst report that seems to suggest that there are issues, but I can certainly tell you that this is not the fact. The analyst doesn't seem to have even bothered to have understood the terms of the Pfizer deal. I must clarify here that this is not an outright licensing deal, which is really the norm in most cases, where the onus is on the licensee to incur development costs of such licensed programs. In this particular case, it was a licensing deal that mandated the licensor, that is Biocon, to incur the development costs. So it's a very different kind of deal structure, and I think the analyst has not understood what this deal is all about. So as far as we are concerned, we have been very open. We have disclosed the way we would treat any fees received from Pfizer in terms of our development obligations, and that is the way it has continued to be even after the closure of the Pfizer agreement. So there has been absolutely no deviation from what we propose to do. And as far as we are concerned, we are GAAP compliant, and we have absolutely no issues to talk of on this particular front. As far as the future of biosimilar insulins is concerned, we remain very positive, very committed. I just think you have to watch this space because we are announcing a number of partnerships globally, and I think this is going to be a very, very important segment for us.
Okay, morning. A recent brokerage has indicated that there are issues with the accounting policy of the Pfizer milestone. And what the report says is that cost should be recognized as a one-off rather than in a staggered manner. This would mean over-reporting of revenues and EPS for the company. What's the company's strategy for recognizing these revenues?
Like I've said, the analyst has no understanding of the deal structure or the terms of the agreement that we had with Pfizer. This is not an outright licensing deal. In an outright licensing deal, yes, the licensee has got all the obligations of incurring development costs, and in which case the licensor normally books any fees or upfront received from the licensee to the profit. But in our case, this is not the case. In our case, we are expected to incur all the development costs. And so what we have done is we have, as disclosed right up front, treated the fees received from Pfizer as deferred revenues, against which we will set off all development expenses. Nothing wrong. Absolutely GAAP compliant. I don't know what the analyst has, is finding fault with, but I think his logic is flawed, and I don't agree with it.
Fair enough. How much of the $100 million in the escrow account is to be recognized by the company at this point?
I think we have already disclosed that all the retained fees from Pfizer have been recognized as deferred revenues.
Okay. In which case, just moving focus to Axicorp, what was something that has been cited. What's the logic of buying Axicorp first and then selling it back with some of the insulin rights to minority shareholders? I mean, it's just a simple question as to how did the vision change over a period of 2 years from upping the stake?
Well, Axicorp predated the Pfizer deal. Our plans were to basically have a European arm to market our insulin, given that the promoters of Axicorp were familiar with the insulin market. And once the Pfizer deal happened, we decided that, there was no great role for Axicorp. In addition to that, we had expected Axicorp's profits to be able to help us with our marketing efforts when we launched insulin. But as you know, the German market became extremely challenging with all the kind of mandatory rebates that they had instituted, and as a result of which, Acticorp's margins were wafer thin. And we didn't think that it was, prudent of us to continue with this business because we felt that even if we wanted to market insulins on our own, it was possible to do it without Acticorp. And that sort of was the reason why we basically then sold back Acticorp to its original promoters, which I think was a very good thing for us to do.
What kind of capital gains did you book from the sale of Acticorp?
It is absolutely, no gain, no profit. It is absolutely profit neutral. We have not booked any profits on account of Acticorp. The Acticorp deal was structured as a part cash, part value, IP value, and it was done on the same way basis when we basically sold it back.
Okay. So just before we wrap up, Ms. Shaw, how do you see growth come into the base business of the company over the next, let's say over the next 4 quarters?
I have shared with you on several recent occasions that we have identified clear growth verticals. And each of these growth verticals has a huge potential of growth. Starting with the insulins business, which we are very, very excited about in terms of its both the short-term, medium-term, and long-term growth prospects. We are very, very committed and excited with the performance of our branded formulations business, which is growing 40% per annum. We are very committed to our biosimilar biologics programs, which is most of it partnered with Mylan. Again, that offers us very lucrative medium-term opportunities in the emerging markets and very large opportunities in the developed markets. And then we have our novel programs, 2 of which are, in the very interesting stages of development. Oral insulin is a program that we want to advance to the next level, and our CD6 antibody, itolizumab, has just completed phase 3 trials in India and is ready for licensing. And then we have another, range of molecules in the novel programs category, which are under development and at various stages of early development. But overall, I think we have a very robust business. Our historic small molecules business is doing extremely well in terms of immunosuppressants and statins. We remain committed to statins because we are a very strong player in all the statin areas. The next opportunity for us is certainly atorvastatin and rosuvastatin.
All right. Ms. Shaw, we leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. So that's Biocon speaking on the report. Couple of concerns cited out there. I clearly believe that the analyst hasn't really understood the nature of the deal and the business, and therefore the concerns are not valid. 212 though is Biocon. Start doing okay.